This video is sponsored by CyberGhost VPN. America is bleeding. Billions in capital are flowing out of the country. Thousands of researchers are packing up and moving abroad. And skilled workers are leaving in record numbers. But can America's pain be Europe's gain? Now, there's already plenty to talk about when it comes to Trump's relationship with Europe, which, let's be honest, is rocky at best.
I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it.
Yeah, that really was Trump at his diplomatic best. But in this video, we're not getting into that. But rather, we will look into researchers' talent and money leaving the US, what the EU is doing to take advantage of this, and of course, my opinion at the very end. Let's start with American researchers. If there's one thing researchers need, it's stability. Long-term projects, steady funding, and no surprise policy shifts every election cycle. And that's the exact opposite of what Trump has been delivering. In fact, he's gone on the offensive. First, he froze $2.3 billion in funding to Harvard and even threatened their tax-exempt status. Then Columbia University saw a $400 million fund freeze over pro-Palestine protests. And even the National Science Foundation is under attack, with a proposed $4.7 billion cut. And there are plenty more examples like this all over the country. So it's no surprise that many researchers, who, let's be honest, tend to lean a bit left, are starting to wonder whether they still want to contribute to a country that feels increasingly hostile to their work. And now, the data is even starting to back this up. According to a Nature poll, 3/4 of over 1,200 scientists said they're considering leaving the US because of Trump's disruptions. Their top choices: Europe and Canada. Also, in 2024, only 23 US researchers applied for European Research Council grants. And in 2025, 114. That's a 400% increase in just 1 year. And in France, nearly 300 US researchers applied for a new scientific asylum program, one of the first in Europe to offer refuge for academics feeling squeezed back at home. So yes, while this is still small scale for now, it matters. Because education and research are a huge part of the US economy. In 2023 to 2024, 1.1 million foreign students brought in around $44 billion. And a 2022 report found that a quarter of all billion-dollar US startups were founded by former international students. So yeah, students aren't just studying, they're building the US economy. And if they start going elsewhere, that is a big problem. Now, before we get into the second major outflow from the United States, money, let's take a quick moment to talk about something that affects all of us online: privacy. Whether you're reading the news or streaming your favorite shows, your activity isn't as private as you might think. Internet providers, public Wi-Fi networks, and even the websites you visit can track what you are doing. And sometimes it's not just about privacy, but access. Only a couple of months ago, our EUMS livestream was only available in the United States due to a YouTube issue here in Europe. And viewers with a VPN like CyberGhost VPN could watch as normal, while everyone else was blocked. And that's why today's video is sponsored by CyberGhost VPN, trusted by millions worldwide and rated nearly perfect by its users. Simply select one of their 100 locations before you browse to encrypt and reroute all of your traffic through their secure servers. Your activity and data is protected, even from CyberGhost themselves. And it unlocks streaming libraries from other regions. For example, I love BBC's iPlayer, which is not available in Germany without a VPN like CyberGhost. And it works on all major devices and operating systems. And you can protect up to 7 devices at the same time. Perfect for sharing with friends and family. So use the link in the description below and get 84% off, which is only €2 per month. And with a money-back guarantee, getting CyberGhost VPN is a no-brainer. Back to the video and to the second big outflow of American resources, which is money. Now, if you've seen the recent stock market surge, you might be thinking, wait, what do you mean outflow? The US economy is doing great. And yeah, on paper, you'd be right. American stocks are booming. The markets are hitting record highs. But that doesn't necessarily mean everything is fine. There are plenty of possible reasons for this. The AI hype, investors looking for safe bets as the debt market wobbles, or decreasing interest rates. Some economists are starting to call this a K-shaped economy. Basically, some sectors are absolutely thriving: tech, finance, and anything with AI in the name, which means the rich are getting richer. But everyone else, the average worker, is struggling with rising prices, rent, and debt, all piling up. So yeah, for a lot of Americans, it doesn't really feel like there's much to celebrate. And many analysts are also starting to doubt the official inflation numbers. Not just because the prices feel higher, but because Trump literally fired the head of the Bureau of Statistics. Trump did not like her numbers, and now she's out. Not exactly a confidence boost in any statistics coming from the US. And then there's gold. Its value has been skyrocketing, which, if you know your economics, isn't exactly a good sign. Gold usually spikes when investors get nervous. It's basically the global uh-oh button. So, what are investors doing? Well, there are indications that they're ditching America. According to data from the London Stock Exchange, over $100 billion has flowed into European equity funds by July this year, 3 times more than the same period last year. Meanwhile, capital leaving the US is about $87 billion, approximately double of what it was last year, which, to be honest, is crazy. Capital investment firms are also on the rise. In the first half of 2025, European hedge funds led globally, attracting 53% of all new hedge fund investments. These firms are at the very center of the investment world, and a win like this on the European level is significant. Now, whilst Europe isn't perfect, and we're looking at you, France, it's holding steady. The EU's GDP is expected to grow by 1.1% in 2025 compared to 1.8% in the US. And what's really interesting is the deficit gap, which is the net government spending minus the net revenue. Basically, it's a measure of how much the government is spending money it doesn't have. The EU's 2025 deficit is projected at 3.3%, while America's sits at a staggering 6.2%. That's massive. Because when you look at a graph of the debt to GDP ratio, Europe is doing pretty good. On the other hand, it looks like the US's debt payments will continue to worsen. And sure, the US can afford more spending because of the dollar's global dominance, but investors are starting to ask how long that can last. The third major resource flowing out of the US is skilled labor. America is locking down. Recently, the Trump administration introduced a $100,000 visa application fee, saying that it's meant to prioritize American workers over foreign talent. But that big price tag, combined with a general "you're not welcome here" vibe, is putting thousands of visa applications at risk and pushing skilled workers to look elsewhere. According to JP Morgan, this policy alone could mean 5,500 fewer high-skilled workers applying to the US every month. That's thousands of engineers, doctors, and researchers who might have otherwise taken high-paying jobs and boosted the economy. And since Trump took office, the foreign-born workforce has already dropped by about 1.2 million people, a 3.6% decline in just a few months. So, all of this spells trouble for the US, and it's a big opportunity for Europe. And Europe is already trying to capitalize. For example, the European Research Council, which funds cutting-edge science projects across Europe, has doubled its relocation budget to 2 million euros. Then there's the Choose Europe for Science initiative, €500 million in incentives to lure top academics from around the world. And when it comes to talent, Europe is becoming more welcoming. Reforms to the EU Blue Card, Europe's version of the US Green Card, are making it simpler for high-skilled non-EU workers to move and work across the continent. The EU is also speeding up work on the EU Talent Pool, a new platform connecting skilled professionals with job opportunities throughout the continent. And member states are also trying to capitalize, with countries like Germany with its Global Minds initiative, Austria's research grants, France with Choose France for Science, and Ireland's heavy investments per researcher are all doing their part to attract top talent. And while these efforts are great, Europe does need to be careful not to compete against itself. Here's what I think. This is a great opportunity for Europe, but it needs to do way more and way more quickly. You see, Europe's strongest card is the single market. It's basically the EU's superpower. 27 countries, one big marketplace. And it comes with so many perks. Shared standards, easy trade, free movement, all the stuff that makes Europe, well, Europe. But here's the thing. Even with all of that, the US still has a massive edge when it comes to business and innovation. And I think the biggest reason here is finance. Europe doesn't have anything remotely close to a financial union. And this is crippling our ability to build tech giants and get the very best talent. Let me explain. In the US, the brightest students can easily start a business, raise money, and scale it nationwide. In Europe, it's a very different story. Here, every country has its own system, its own incorporation rules, its own corporate law, and its own tax regime, usually higher than in the US. That means if an American talent wants to set up shop in Europe, they're in for a massive headache. It's not just the paperwork, though yes, there's plenty of that too. It's the fact that investors get nervous when they don't understand the local rules. Think of it this way. If you had 1 million euros to invest, would you put it into an American startup where corporate law is simpler, familiar, and consistent across 50 states? Or into a company in Portugal where you don't know the system, the taxes, the legal code, and you'd need a team of lawyers just to figure it out? And imagine that times 27. Yeah, for me the choice is pretty clear, and my 1 million euros, even though I'm a super proud European, would go straight to Trumpland. But, and this is a big exciting but, Brussels is finally trying to fix that. The EU is working on something called the Capital Markets Union, which aims to make money flow more freely across the bloc. And one of the most interesting pieces of that puzzle is the so-called 28th regime. It's a fascinating idea, basically creating a virtual 28th country inside the EU where one unified set of business rules applies. So companies can operate across all member states without having to navigate 27 different legal systems. And for investors, this is gold. They'd need to learn just one system with potentially just one lawyer to invest safely into startups across 27 member states. I really love this potential game changer, and we have a long detailed video coming on this soon. So subscribe if you're interested, because maybe, just maybe, this new law will finally make Europe a real alternative to the US for global talent. Thank you so much for watching, and make sure you check out CyberGhost VPN if you want your privacy protected. Check out the link in the description below. And thank you to our presidents, Jan Schaukje, Christian Peter HVD, Daniel Unite Europe, Stefan, and Kiki Loxen. See you in the next video.